Joining us now at the SIBO in Chicago is Chicago Fed President Austin Goolsbee. Austin, great to see you.
Great to see you. Welcome to the greatest city in the world, city of big brains and broad shoulders.
Well, the big brains are yours. Broad shoulders may be mine. I have no idea. These are pads, by the way. Austin, thanks for joining us. Okay, so it's been a weird couple weeks because the price of oil was over 100. Now it's at $70. It goes into so many things that go into the inflation that you and your team watch so closely. How hard is it for you and your team to get a read on inflation right now?
It's hard to get the through line, for sure. And then not just at the Chicago Fed. Everybody sees that. You talk to people trading the futures. They're trying to figure out what's the through line on inflation, how persistent, how temporary are these hikes that we've seen. The Fed, as you know, has an inflation target of 2%. We've been above that number for 5 straight years.
I know you went to MIT, but 4 is not 2. I don't
know. 4 is not 2.
Do I need to tell you that?
4 is not 2. And so the question, we've had periods where we were making progress, then we kind of stalled out on the progress. Lately, it's been going the wrong way. But some of the going the wrong way is driven by what we hope to be temporary events, wars, tariffs. These are things that are supposed to be one and done, and then you would see the inflation going away. It's been a little more disturbing on the services side because that's not real. That elevated inflation is not coming from tariffs. It's not coming from oil prices. So I think we got to keep watching these numbers. It wasn't all negative in this inflation report. You have seen now a little bit of improvement on this services inflation, and I've been identifying that as something that we would want to see. But right now, as between the two sides of the Fed's mandate, the inflation side and the job market side, clearly the problem's on the inflation side.
How different was last week's Fed meeting from what you were accustomed to?
Yeah,
and
look,
to have the former chair at the
different.
table.
And the former chair's at the table. Now, as you know, it's a very secretive hush-hush, so I'm not saying what anything was said. I worked pretty closely with now Chairman Warsh back in the financial crisis, 09, 010, 011. I thought he comes in with new ideas. He's a serious guy. You saw in the press conference that he comes with a different style.
Well, that statement.
But
that statement was one paragraph long.
The statement was succinct and to the point.
Do you like that?
Look, as I've said, before I was ever at the Fed, and since I've been at the Fed, I've been uneasy with the use of forward guidance and speculating about the future of rates on a routine basis.
You hate the dot plots?
I don't know that I hate the dot plots. I definitely don't like us committing 3 years ahead forecasts of what
silly.
we think it's going to do.
But you didn't abstain. Kevin Warsh was the abstainer. He said that in the press conference. He said there were 18 and 19. I was the guy that didn't do it. So you obviously submitted your forward guidance. But you would be in favor of that.
That's the system we have.
But you'd be in favor of that going away.
I don't want to get with the chairman has organized a communications task force that's going to think through what all the options are. I welcome that thinking. We should constantly. I described it a little bit as a caffeine cleanse. That even if you think that there are uses for forward guidance, it behooves you to every once in a while not drink 3 cups of coffee every day so that when you really need it, it's more effective.